Welcome back to another episode of Futures Fever. Today I've got a special guest, Andrew Diaz, also known as the Stock Market Wolf. He's going to share a bit about his trading journey, his own personal trading strategy, and walk us through how he approaches the markets. But before we dive in, let's cover what is Apex Trader Funding and how you could profit with a prop firm.
Welcome to Futures Fever, where we dive deep into the world of futures trading and uncover opportunities no matter the market conditions, because volatility is simply an opportunity to find profitable trades. So don't sit back and relax, but sit up and engage as Futures Fever, powered by Apex Trader Funding, starts right now.
Boom, boom, boom. What's up, traders? Man, I hope you're ready for a great show. We're going to cover a little bit of what is Apex Trader Funding. So first off, I'm your host, Kevin Dubriske, and I'm excited to have you all here. As you know, we've got special guest Andrew Diaz, aka the Stock Market Wolf, joining us today. Super excited about this. We've really tried to revamp this show for you guys at home. So what's on today's agenda? We're going to cover how Apex Trader Funding works. We're also going to be doing a free Apex Trader giveaway, so make sure you keep an eye out for that link in the comments below. And we're going to cover some market insights with the one and only Andrew Diaz. So why trade with Apex Trader Funding? Apex Trader Funding gives traders access to funded accounts, removing the need to risk personal capital. So you could trade with a prop firm and really risk very little of your own capital and still take out thousands worth of payouts. You get access to firm capital to trade the futures markets. You're not trading options or stocks. It's just futures. You earn up to 90% of profits. It's 100% of the first 25K you make. That is huge, guys. Apex completely blows out any other prop firm out of the water, out of competition, guys. Zero personal liability, trade stress-free. There are no penalties. You don't have to trade every single day. You trade at your leisure and know that if you blow an account, there's no penalty. You could start right on over again. It's a three-step process. You pass the evaluation account, you get on your funded account, and then you're able to withdraw your profits. There's no long-term contracts, very flexible rules, and scalable opportunities. They are running a major sale right now, 80% off. Use discount code FFEVER, guys. Next time you buy an Apex account, sale ends tonight for 80% off. Discount code FFever gives you the best recurring sale. They also have $50 off resets, $50 resets, I should say. Lifetime one-time performance account fees are set for every account size to just $140. And Apex has paid out over $550 million in payouts since 2022. Guys, here's the fun part that a lot of you have joined for. Win a free evaluation account. So while our producer gets the link to post in the comments, last week's winner was Vanessa. Congratulations, Vanessa. Join us here every week at 11:30 a.m. for Futures Fever. I'm going to have special guests, traders that know the markets and how they trade markets. Now, let's bring on today's special guest, Andrew. Andrew, man, how are you? Welcome, welcome.
How's it going, man? How about yourself?
Dude, I'm doing good, man. I'm excited to have you on today. Thank you for being here.
Yeah, thanks for having me, man. Excited.
Absolutely awesome. So tell me and the viewers a little bit about yourself for anybody that's tuning into Futures Fever and might not know who Andrew Diaz is.
Yeah, so hey everyone, Andrew Diaz. I've been trading in the stock market since 2009. Started off as a single dad, worked my way through school, education, and going through the traditional route system, working in corporate America at Amgen, a biotech company. And during that whole time, taught myself how to trade, reading books on trading, investing, personal finance, taxes, anything that I could get my hands on related to money. And then, I did pretty well investing. And then I read this book by Grant Cardone called The 10X Rule. And then I started to dabble into day trading. And then at that point on, I was completely hooked. So it's been an amazing journey in short, to kind of summarize the whole journey. But now I spend my time with my family, first and foremost, on my mental health, on my physical health. I was super heavy just a couple years ago. I was weighing about 215 pounds at 5'6". which is very heavy. And today I'm at 156 pounds. So
Wow, good for
that's
you,
been,
man.
thanks, man. So that's some of the power of trading is, being able to buy back your time invested in good food, invested in your fitness, invested in your mental peace, and then most importantly, investing it back into your wife and your kids, or for those of you that are wives, investing it into your husband and children. So
Yep.
um,
Yep.
now I just
Family.
want to share that with the world.
No, dude, that's amazing. Listen, I'm a firm believer, even before I was a trader too, right? It's always been family first. Family
Mm.
first and our health first, because without our health, we don't have anything. And our family is our family. We love them. We have to be there for them. So trading gives us that ability to say, okay, let's trade in the morning, couple hours,
Mhm.
then have the whole afternoon. Be there for my family, be there for soccer events, be there to take them to
Yeah.
the doctors, not miss crucial events that are milestones that unfortunately a lot of people have to miss because they are stuck in that corporate America that you were mentioning before.
Right.
So
100%.
what you mentioned a Grant Cardone book, the 10X book, that sort of got you into that didn't get you into trading though, did it?
No, Rich Dad Poor Dad by Robert Kiyosaki is
Oh, that's a good one.
which is what got me, because when I was that poor dad, uh, I had moments where I was at my low, and then I just naturally have always been a nerd, or book nerd especially. So I went to a store called Borders. I went first to the religious aisle, thinking that there was going to be something there to save me. Um, and I'm sure there could have been, but not maybe financially. So then I asked one of the ladies that was walking by, where could I learn about money? She pointed me to the
The bank.
business section, and then right in the business section were was a whole column of Rich Dad Poor Dad. Here I was a poor dad. The book was Rich Dad Poor Dad. Um, Picked it up, and then the first title is what drew my attention. It's the rich don't work for money; they have money work for them.
Yep.
A concept I never heard of, concept I was never taught. And from then on, I was hooked. And in the book, there was three main principles that were taught: the importance of business, real estate, and investing. And from then on, just fully focused on the investment side and trying to make money to put into the stock market.
Right.
Um, and then the rest was history.
Wow, that's amazing how just those two books alone, right, could sort of help
Just those two. Yeah.
just help form, help format a stronger future for you, right? Imagine where you would be right now if you never picked up those books.
Yeah. I reflect on where I feel that there's people that come into your life at the right time to guide
Yep.
you in a certain direction, but then there's moments in your life where it's a pivot point. Just like in trading, there's pivot points of resistance and support. We kind of nerd out there, but there's points that will pivot your direction, and then you have to determine, what that lesson is trying to give you, and so. Um, I reflect on just picking up the book and, you know, reading it, obviously, and kind of the lessons gained from it. But that goes to
Yeah.
even talk to of just picking up a book in general and reading. You never know what lesson you're going to learn from it, and then how your life is going to develop as a result of it. So just kind of go into things with that open mind.
Wow, that's amazing, guys. Andrew, make sure you guys drop a like. Andrew's already dropping some great knowledge for us, and we haven't even gotten into the charts. We haven't gotten into any trading strategies, because guys, trading isn't just strategy. It really is. Mindset is 80% of trading. Andrew, do you agree that it really is mind over strategy when it comes to trading in the long run?
Yeah, I mean, the psychological part is going to play a much bigger role than your strategy will at some point. Because like you could have the strategy, but if you don't have the mental capacity to follow through with the strategy, and you don't have the discipline to stay within your rules and your limits, and you start to overtrade or overanalyze, uh, that can become detrimental to your account. So
Yeah. Andrew, we're getting a little bit of an audio glitch over here again. I know we're sort of dealing with that
no.
this morning. Do you have a mic through your computer that we could try to use? And we'll try to figure that out. Thank you, Andrew. I appreciate that. Sorry about that. Sorry about that, ladies and gentlemen. Make sure you hit that like. We will try to get this audio issue sort of straightened out real quick. Again, drop that like for Andrew for taking the time showing up today. We're going to cover some of his trading strategy, how he approaches the market. What's that?
How about this mic? Is that better?
It is. It is. There's a slight echo, but it should be okay.
How about now?
Much better. All right. Perfect.
Okay.
All right. So guys, let's get right back to where we were. So Andrew, other than the books, what strategy did you start with? I feel like everybody had a starter strategy and it's not where they ended up.
Yeah, so when audio's okay?
Dude, night and day. Perfect.
Okay.
Thank you.
So for me, the strategy that I used when I was starting out, I was trading small cap shares. So I was trading what the general person calls like a penny stock.
Okay.
And so I could just even use it as an example. I'll pull up
Yeah.
a chart.
Do you want to pull up your chart?
Sure.
Okay.
So I'm just gonna try and find a random one.
I think WULF Wolf was a pretty good small cap stock, was trading around $10 recently.
Here's an example, just because this is recent to today, right?
Nice.
So normally what I would do is I would find a stock that was gapping up in the pre-market. This is like old Andrew Diaz. So this is I only trade futures and options now. I don't.
No, sure. That's all right.
but just so that people could see
where you started.
Difference. I used to find stocks that were gapping up. So like this stock, the previous night closed at 90 cents. And in the pre-market, it was all the way to $1.80. So,
oh wow,
to 100% return, right?
Right.
Just in the pre-market. So then I would look at that and then I would say, okay, well, if we break the pre-market high, then I would look to take an entry. And then from that entry, I would try and target at least a minimum of 10%.
Okay.
So if it was a $2 stock, it would need to go to $2.20. If it was $1, it would need to go to $1.10, and I would make 10%. And what I would do is I would put in the same dollar amount on every trade. So I would consistently put in somewhere between, let's just use simple math, $10,000.
Yep.
So if I went in 10,000 and I made 10%, I would make $1,000. But then I would set a 5% stop loss. So if I lost, I would lose 500. That's a 2-to-1 ratio. So as long as I keep those variables the same, then I will become profitable, because I only need to be accurate 33% of the time to break even. Anything more than that, if my strategy is hitting at a higher hit rate, I'm going to be profitable. And that's what I did. And so I would just try to find stocks that gapped up 20 or 30%. And I would wait till it breaks the pre-market high and then ride that momentum to hit 10% and make money. And then that drastically shifted as the years progress. And I would even say, like, from the time I started trading to now, there are things that I've kept and things that have shifted that now make up the strategy I have today.
Right. And you know what? That's huge, because something I always mention. And guys, don't forget, fill out the form in the comments below for a chance to win a free Apex account posted just now. But something Andrew was mentioning, right? He was saying how he started with this strategy, but now at this point in his strategy, and we'll go over that too, what he's currently trading with and how he currently trades. But I'm sure we'll see bits and pieces of how he started, but not everything, right? Because as we develop as traders, we don't want to be strategy hopping where one day we're looking for this, the next day we're looking for that. We want to be consistent with our strategy so we can get some consistent results and adapt our strategy to different market conditions.
Right.
So that's sort of where you began. So now you said you're mainly trading what, SPY, QQQ, the NQ. I know we're here for Apex Trader Funding, so we'll definitely talk some futures. How are you looking on the NASDAQ today? You mentioned to me earlier that you took some trades on NQ.
Yeah. So similar style in terms of like, what I have realized by trading everything now, right? Because I've traded the shares, I've traded the options, I've traded the futures. The chart is the chart.
Right.
And if I can understand how to read the chart and have good technical analysis, then I could trade anything. The only difference when it comes to trading shares or trading options or trading futures is number one, the execution of it. And then number two, the risk management associated with that thing that you're trading, whether it's shares, options, or futures.
Right.
So from a technical perspective, the thing that I do without failure is I do what is called a top-down analysis.
Nice. I do the
That
same thing.
top-down
I love it.
analysis, I start on a higher time frame, such as the daily chart. People call this the daily chart. I call, this is what the daily chart is for those that are maybe don't have the education. Every single candle represents a day of time, but the overall time that we're looking at is a year of data. So I have 12 months of data from September of 2025 to September of 2024, right? Or we're not in September yet, but we're almost there. So I have this whole chart to kind of use as reference, but I focus on recent instead of too historical, such as like it makes no sense for me to draw levels based off of 1900
Right.
because we're at 2400. That's a waste of
Right.
my time to
How
kind of
helpful could that be?
draw this in. So then I focus over here. This is where my focus is what's most current, where we have this level at 2400 and this level at 22,000. So then now that I start macro, the next thing is to go micro. So what is a year comprised of? Months. And then at least on Thinkorswim, the only 1 month chart that is there is this 20-day 1 hour chart. So there's 20 trading days in a month, Monday, because you're only trading Monday through Friday for the most part. So I look at this chart and I do the same thing. I try to find areas where we've had resistance or support. And this yellow line that I have right here didn't come from today. This line came from 8/11, the 11th of August is where this line first, or actually even before then, on the 7th of August, where this was resistance and it pushed us down. And I'll use like a little circle to kind of highlight this for you, right? So we hit here, we broke it a little bit, but came right back underneath. And then over here, price stayed above that line. So to me, that's a level I want to draw, because then we see even on this date over here, on the 22nd, it was resistance for me. And then again, on the 25th, it was resistance for me. And then again, on the 26th, it was resistance for me. So now, when we go into the 5-day, 5-minute chart, which is what I use to day trade, I will then draw my levels of whatever I see that is recent that may play a role today, such as this line right here at 23,500 that I drew, and this line here at 550. So then when I go into the day, and you don't really see what's going on here, right? But I start here, and I have support down here, what am I starting closer to? Support or resistance today? I'm starting closer to that resistance.
Right.
So then the initial hypothesis is that it's going to reject off of here and bounce back down to this white line. That's the
Okay.
initial. And it's obviously, it did do exactly that
Yep.
in the pre-market. It went from that yellow line all the way to my white line. And if you notice, that white line came because over here, yesterday, it was resistance for me.
Right.
And today, what was resistance became the new support.
Wow, that is
So
fantastic.
as it broke this morning, I waited. I normally wait the first candle because the first candle is the most volatile. The most volume is within that first candle. But sometimes there's a lot of indecision within there. So I kind of let the first candle settle. That helps to give me guidance on where direction we're headed.
The first
The
candle on the
first
5 minute
candle,
you let settle?
say that again, sorry.
You let the 5-minute time frame, first 5-minute candle on the New York session?
Yeah, on the
Gotcha.
New York session, the first 5-minute candle settle.
Awesome.
Yeah.
Now,
So go
sorry
ahead,
to
sir.
interrupt. Some people you ever hear the orb, the opening range breakout, where they wait for the 15-minute candle? You ever do that where you wait for the 15, or you usually just trade off the 5?
Just the 5.
Okay.
Mhm. So I wait that 5 minute and I kind of get a sense of direction. In this case, it doesn't help me at all. It closes green. But what does help me is my exponential moving averages. So every single candle leading into the open stayed underneath that 9 exponential moving average.
Mm,
This exponential moving average also is a layer of resistance and support. So if I'm underneath it, just like how we see here, notice when it comes up and touches right here at 555, it
right.
rejects and gets pushed back down.
I
And then
see.
when we touch again, it gets rejected and gets pushed back down. So I don't want to go long unless I go above the EMA, and I want to think about going short so long as it stays underneath the EMA. But because we stopped right here, this is like the layer I'm looking at to break to see if then I go short. And we
Right.
get that confirmation at 6:40 in the morning, 10 minutes into the open. We have a doji candle get rejected off the EMA. The following candle closes here. But the nice thing about this candle is that it's closing at the same place where we wicked on the first market open.
Right.
So once I see the follow through and see the momentum on the next candle continue down, this is where I take the short. And this only ended up being 20 points, but this went from 524, 524 down here to 500, and that 500 is my target because that's where my support is at. So this ends up being a 20-point move. We cover some profit. We let a little bit kind of hold to kind of see if it continues down. It comes down a little bit more. It gives
Yep.
us another additional 20. But then my exit is my entry.
Right.
So if I bought 10 contracts, let's say it hits that target, maybe I sell half or a fourth, depending on the remaining contracts of whatever I have. When it comes back to entry, I get out the trade.
Right, so you move your stop to break even. That's great. Vess on YouTube was asking, so the 9 EMA is like a VWAP some people use. Exactly. So it's almost like Andrew's almost using his moving averages like like an active support and resistance. So those along with his planned out support and resistance levels, we almost see there with the 9 EMA moving lower, the green 9 EMA, it was moving lower and the candles were squeezing against his support level. That also is giving a good confluence that we're going to have a little squeeze and push through to the downside.
Yeah.
Awesome.
Exactly.
Real cool stuff. So that's a trade you took this morning, Andrew?
Yeah, so we took the short there, and then for the long, there's to me there's a bunch of different strategies people can use. If I remove just to kind of show, right? If I remove these EMAs just for now, then you trade what is called level to level. And level to level is just using like what we were talking about earlier, your top-down analysis. You're starting closer to resistance, so you're thinking to go puts. Once you hit that support level, then the idea is to get out of those puts and then start to do what? Buy calls down here at this bottom. The only problem, at least that I have ran into, is that I have no confirmation that it is moving up. We could even have this candle here that goes green, and it's an engulfing candle because it engulfs that previous candle. And the hypothesis is that it would continue. But if I added my layer of EMAs, sometimes that same engulfing candle ends up staying underneath that EMA. In this case, it obviously did. So I don't want to get in here because now that I've added that second window to kind of see, if all of these candles that stayed underneath the EMA and it continued to drive us down, I still don't want to get in yet because I'm not breaking that EMA. It's not until here where I get that confirmation at this 556 when we finally close above that EMA, where now I feel more confident because now we're breaking trend because all of these candles were staying underneath. This is the first candle to break it. So then I watch the follow through on the second to see if it continues that momentum. And then I take the long there. And as long as it stays above that EMA, I stay into it, and it comes look exactly where it comes to, right to my resistance level that we drew from the pre-market.
Fantastic.
Take
Yeah.
my profit here. This trade ends up being a much better trade. This goes from 556 all the way up here to 615, about a 60 point move.
Nice, fantastic, great trade, good analysis, great using your tools, great using your charts. Say, okay, when this indicator crosses this, I know that I'm going, or this candle closes above, that gives me confidence to take it. Or like you showed that green candle that didn't close above, that told you, okay, well, now let's be a little patient. And that's great, because guess what? If you were to take that long entry down there off that first green engulfing candle, there's a good chance that red one following would have stopped you right out. So really important, guys, to know your confirmation, know your confluences too. We're traders. We are not gamblers. We're not here to flip a coin and hope it goes in our favor. We're here to do our analysis and trade with the probabilities. Awesome, Andrew, dude. I love it. Guys, make sure you're hitting that like and subscribe button. Andrew's dropping some gold for us here today. And going forward, guys, next Wednesday, too, we'll have another special guest. You guys make sure to follow us on social media, is at Benzinga. We'll announce that special guest tomorrow. And make sure to give Andrew a follow as well if you're not already following him at the StockMarketWolf. Really great stuff there.
Appreciate it, man. Thanks again for having me.
Dude, absolutely. So other than NASDAQ, do you do any trades on the ES as well?
Yeah, and it's all well. Normally for ES, I just focus on trading SPY options.
Okay.
But when I just focus on futures, yeah, we'll add in ES, and it's the same principles
Right.
of using your EMAs, using your support and resistance levels, and then being patient and following your rules that you develop.
That's awesome. That is great. So let me ask you too, do you use moving averages on higher time frames, or you're just using them when you're day trading?
So I do use them for my investments, and I do
Okay.
use them for swing trading.
Okay, cool. That's
Yeah,
awesome.
so it works the same. If let's use
Right, it's all fractal, right? What we could see on the 5-minute, we could probably see on a daily.
yeah, so like if I let's pick up like Tesla, for example. So same kind of concept, right? Stays above this 9 exponential moving average, I hold it.
Okay.
Goes underneath, I short
You're out.
it, and Same thing. Look at it, stays underneath, underneath, underneath. So you ride the whole wave down.
That's awesome. So can I ask you then, because some people now, of course, we always have to know in the industry of the stock market, there's going to be the grumpy people that go, "Oh, that doesn't work all the time," or "What are you doing? That doesn't work." I'm on the opposite side of the fence. I believe every strategy works. It's up to the trader to find the confidence and the consistency with that strategy to make it work. But for
Yeah.
moving averages, somebody says, "Oh, well, moving averages are lagging indicators." What's Andrew's answer to that?
Yeah, they're right. It's a lagging indicator, but it's still a tool.
Right.
And something that I've learned, there's a lot of people that speak, maybe I'm not going to say the word negative, you just don't know what you don't
Yeah.
know, right? Um, but the interesting thing, when I went onto the New York Stock Exchange and I was talking with Peter and I'm talking with other analysts,
I know what you're going to say because I saw it too when I was there and I was surprised.
many of their algos
Yep.
use the EMA.
Yeah, dude, that blew my mind. When I was first time I went to the floor was a couple months ago with Peter too. I saw a bunch of charts, a bunch of markets open, and I'm like, are they using TradingView with moving averages at the New York Stock Exchange? Why did I have the assumption that, this is the floor of the NYSE, they're going to have all this crazy technology. They're using the same thing that we have available to us at home.
Mm-hmm.
But yeah, it was cool. When you went, was it a little quiet on the floor? It was surprisingly empty.
Yeah, it was pretty empty, but yeah, I found that super fascinating, and it makes sense though.
Yeah.
You if you're going to program something, you can't do it just off price action alone
No.
because you don't have any constant variable to look at or anything to go off of.
Right.
There's no way to build something that's supposed to be systematic just around price alone. So you have to have these other variables that are needed, whether that's VWAP, whether that's EMAs, whether that's Fibonacci retracements. There has to be something that is used in conjunction with it.
Right.
And if you notice from my strategy that I'm talking about here, I don't just use EMAs by themselves. I am using them in conjunction with price, which it also translates to volume and momentum. And I'm looking at key levels, which is also based from price and historical data. And when you use all of those things in conjunction with each other, you give
Right.
yourself an edge.
There you go. That's what it's all about, guys. Find a strategy that gives you an edge. Guys, make sure you're hitting that like button, running it up. Somebody asked in the comments, does anybody know if they're actually raffling off these Apex tests? Of course we are. So I know you said you participated in 3 already. I guarantee you, I promise you, we are definitely raffling them off. So we raffle one off here on Futures Fever. That's every Wednesday, 11:30 to 12:30. And then there's another Apex show here on Benzinga called the Trader Bacon Show. And that's Mondays at 11. They give 3 away there. So if you want, enter the contest here. Go to that other show when they're hosting that other show. Enter the contest there. You have a better chance of winning. That way you're entering 4 contests for a high chance of winning.
Awesome.
Awesome. Andrew, have you been trading futures at all lately? I know you mentioned earlier you have been a little more mainly on the NASDAQ. So you trade mainly SPY for ES, you like SPY options for QQQ rather than NASDAQ?
Yeah, so I'll trade futures NASDAQ and then I'll do options SPY.
Any reason for that?
Um, I think just comfortability at this point, or like what my comfort zone is. What I have found is that there's some days where the S&P, we could even use today as an example, where the initial, let's see, 5, 10, 15, 20, 25, 30, 35 minutes, there wasn't a trade on the S&P because this is all choppy. And when you're trading options, you don't want to trade into chop because that eats at your premiums. But on the NASDAQ that we traded, we still caught that short for 20 points. And then we were also able to catch the long at the same time that the S&P went long. So I'm
Okay.
just able to now kind of maximize my potential on the day.
Gotcha. Gotcha. That's awesome. How do you choose your SPY strike price for options?
So strikes are there's the stock option is there's two T's that determine risk: time and type. Time is the sooner that an option contract expires, the more risk involved. The further that it expires, the less risk involved. But with less risk comes less reward.
Right.
Also comes with a higher cost. So the sooner that that option contract expires, the cheaper it's going to be, the more risky it's going to be, and thus the most reward. So the most risky option contract in terms of time that you could pick is a 0 day till expiration. And on the S&P, you could pick contracts that expire the same day. Those
Right.
are the most risky that you could choose. Type is the next layer of risk. You have in the money contracts, which are going to be the more expensive, the less risk, less reward. You have out of the money contracts, which are going to be the cheaper, the highest risk, highest reward. And then the at the monies are like Goldilocks and the Three Bears. It's just right in the middle. So the most risky option contract that you can buy is it a contract that expires today and is an out of the money contract that is going to yield you the highest return. However, when you're talking about trading, you can't just focus solely on return. You have to focus on your risk. So for me, I like this trading at the money contracts, and I will pick a contract that expires today because I still want some risk with it, but I will have an at the money contract. So if, for example, today when we went long here at 645, I loaded the 645 at the money contracts.
Okay. Same day expiration.
Same day expiration at the money strike. And then if I want to feel a little risky, I'll add an out of the money, but it's hedged against my at the money.
Gotcha. Gotcha. That makes sense. Awesome, man. That's really cool. So back to your analysis on the NQ and I guess the ES in a whole. Do you ever use the VIX?
No.
No, you don't use the VIX at all.
No.
That
Yeah,
is pretty cool.
I don't use order flow. I don't use the VIX. I don't pay too much attention to the London session other than like drawing my levels from it.
Right.
I would what I have learned, even with life itself, is less is more.
Yep.
The simpler that life can be, the better. And the
Yeah.
simpler that I can make my trading, the better.
Amen. Amen to that. That's funny. I always say whenever I do my morning analysis, I tell them, I say, guys, remember, any old zones, any old levels, delete them because a clean chart is a happy chart. Once you have too much on there, you start questioning every price move you see. You're not going to have a reliable trade setup. You're going to be second guessing everything. You're going to feel FOMO into trades. You're going to overtrade. When we have as little as possible, but what's important, that gives us the ability to emotionally disconnect from the chart and be patient for our trade. Awesome, man. Andrew, great stuff today, man. Did you have any other comments or anything you want to mention?
No, man. Thank you again, and Benzinga and yourself, Kev, for having me on, and to the people that were on here listening, thank you for tuning in. And I hope I was able to provide some layer of value. The thing that I always tell my traders, and if you were to take away something from today, is that trading is a small, tiny piece of the overall money game. There's a lot more to trading once you start becoming profitable at trading, such as investing, taxes, getting into real estate. There's a whole other layer to it. So I always say trading is a small piece of the overall money game, and the money game is a very tiny fraction of overall life.
Yep.
There's a lot more to life than these screens. So don't get so busy trying to make a life that you forget to have one. Um, you are alive today, so make it the best that you can make it. Tell your spouse that you love them. Tell your kids that you love them. If you have parents still alive, call them and spend time with them. Spend time with your children as much as possible, and try not to sweat the stuff that is really small.
That's right. That's right. Amen. And I love the way you started it, right? We woke up. That's a blessing right off the bat, right? Because could always be in a worse situation. So, Andrew, thank you so much for your time. I won't keep any more of your time. Thank you so much. Great stuff today. Everybody on YouTube, X, everyone, hit that like button. Thank you, Andrew, so much.
Thank you, guys.
Absolutely. Take care. And guys, if you want to stick around, I am going to cover a little bit more on Apex Trader funding, and I am going to announce next week's guest. So make sure you stick around as well. So first, I did want to cover Apex Trader funding is still running that 80% off sale. And yes, guys, great trading lesson today, great life lessons even, and great advice overall from Andrew. I'm really looking to make this show the most for you traders out there. So next week, we're also going to have a big guest. I'm looking to try to get, his name is Carmine Rosado. He's a supply and demand expert. He's been trading for over 10 years as well. Really interested. He's where I learned my core of my trading of supply and demand. So it's interesting because when we have traders like, here, let me turn this off for a moment. When we have traders like Andrew who are talking about having less is more, and his few things he has on his screen, he has a moving average, and then he has a support and resistance. He doesn't use order flow. He doesn't use supply and demand. Meanwhile, you could flip the script, and I say the same thing, and so does Carmine, of less is more. We don't have any moving averages. We don't have any indicators. We have our supply and demand zones, which are found on higher time frame areas of support and resistance, so higher probability because they're on a higher time frame. And then we also like to use order flow and volume. This is what helps move the market. Moving averages are great too because it helps give you some type of confirmation. It gives you, like Andrew was saying, something that's concrete that you could consistently be looking for. So going forward, guys, with this show, I'm going to be bringing on some of the greatest futures traders out there. Some people who are making hundreds of thousands a day, people who are absolutely killing it in the market. So make sure you like, make sure you subscribe, follow us on here on YouTube, of course, is at Benzinga, and on Instagram as well is at Benzinga, and my personal is at Trading with Kev right over here. Follow that. I post trading content every single day about what's going on in the economy, what's going on in the markets, and also if there are any big sales going on. Now, back to big sales, Apex Trader Funding is still running that 80% off sale that ends in about 12 hours. So make sure you use discount code FFEVER to get 80% off. That brings the 50K account. Now, when you get started, guys, they have the different plans to choose from. They have wealth charts, they have Rhythmic, and then they have Tradeovate. So I usually recommend getting started with a Tradeovate account so you could connect it right to TradingView. And I would get started on a 50K account. So 50K account, it says it's $187 a month. With the 80% off sale, it's only $36. Guys, it's only $36 to get started trading futures. Way different than when it was 5 years ago where you needed a full funded account to actually trade in the market. So $36, you get an evaluation account. You pass the account, you get funded, you're able to take payouts. Now, I do want to cover some more analysis for you guys. So this is how I usually have my chart set up. Here we have our NASDAQ. Here we have our book map. This is where I see my order flow, volume, So let's pull up the NQ over here. And this is where I took a couple longs this morning. It's funny. The support area that Andrew pointed out was the same exact support area that I had this morning that I was looking for a long position because we had a demand zone at that point. Now, we had a 2-hour demand right here, which was from yesterday's session. So if we're going to turn our drawings off for a sec, look at this area where we have our red basing candle and a strong impulse move. This strong move right here leaves a lot of unfilled orders in this zone. So then we would mark that out with our rectangle tool to show us this is our supply zone. Now, once I broke it down a little further, I also noted we had a 15-minute demand zone inside that 2 hours. So now I'm sort of trying to pinpoint my entry. So now I'm using my zones no moving averages or anything, to find a key level that lines up right in that 23,500 level, the same place Andrew had. So guys, it doesn't matter which strategy or system you use, as long as you're consistently using it and fine-tuning it to market conditions, because eventually you're going to find the same strong levels of support and resistance, because they don't change on different charts. If you're finding support and resistance the same way as me, as Andrew, as Carmine, as this person, the next person, they're going to be very similar price levels. And something really important to keep in mind, guys, is looking at those key whole numbers, especially on things like the NASDAQ. Right over here, 23,600, that's this blue zone right here. 23,500 is this blue level right here. We see that price respected both of these areas. So we would look to buy the lows near 500 and sell the highs near 600. And then same thing happened over here. This was Tuesday's price action yesterday. We came near some lows of 400, around 420 it hit, and then it made its way up to 500. So keep an eye on those key levels, key psychological levels. It's a great question. How long did it take for you to become profitable? Fantastic question. So for me, it took about 2-3 years. So I've been trading for 6 years now. I got started like most people did back when the COVID era began. I got very sick, put me out of work. It was horrible. A lot of surgeries, yada, yada, yada. I just did a podcast on the Forged Trader. You guys could hear about it there. Anyways, went from working 50, 60 hours a week to not working at all because of surgery. So I took all those hours and I put it right into reading book after book, video after video. I'm just trying to figure out the markets. And honestly, that first year, looking back, I feel like it was wasted, because the issue with trying to figure out trading on your own without some type of proper guidance or mentorship is you're going to end up on YouTube University. You're going to end up looking for how to trade the gap fill strategy video. Then you're going to find one video that says to take this entry and another video that completely contradicts it. Okay, well, once you're working with somebody one-on-one that's sort of helping you and guiding you, you're able to ask them the specific questions. You're able to get the answers from them. They're able to help show you what to focus on versus what not to get distracted with. Whereas YouTube videos recommend the next one and the next one, then you're on another channel. So something, guys, for anybody out there who is struggling to find consistency in trading, don't worry about making money right now. Worry about learning first, and worry also about how can you minimize your losses. Being a trader, your goal isn't to just make money. Your goal is to manage your risk, right? Because we're risk managers. We're making sure if I'm risking 200 per trade, I want to make sure I'm making at least 400 per trade, because having a 2-to-1 risk to reward, as the stock market wolf mentioned to us today, 2-to-1 only requires a 33% win rate. That is something that can sit with us easy to know if I take a losing trade, I'm not going to feel that psychological, oh man, I need to get back in and make it back. Because if I lose 200 and then I go win 400, I have a 50% win rate, but I'm still profitable. Then you extend that out longer and further out, and it really does add up. So guys, focus on your win rate and focus on your system, right? We want to be trading the same system that we trade day in, day out. I don't want to be trading supply and demand one day and then moving averages the next day, because then when I start journaling, I'm going to get inconsistent results. I'm going to say, oh, I had a great long position on NASDAQ today. I bought the low. And then the next day I tried to sell when we broke below our moving average and it reversed. So I'm not going to have consistent outcomes to our journey, right? So you want to be able to make sure, if you're using moving averages like Andrew, where you have a 9 EMA and you're using the candle close, use that on every single trade. We do not want to stray from anything. And the great part too, guys, about using moving averages is that you're able to, like, let's say we have an EMA right here, right? And we'll do 9 EMA and we'll see, oh, I don't know if it's going to show. My trading view's been a little glitchy lately. There we go. So 9 EMA, right? So I wouldn't have gotten in. I got longs at near 23,500 this morning, right? I wouldn't have gotten those longs until 23,554. I was getting out at 76. But we're able to use moving averages along with supply and demand, right? Look, once we start breaking out of the supply zone and get a strong close below our moving average and below our supply zone, that gives me confidence to say, let me take this short position, stop at that recent high, and maybe look to target a pivot low or a volume shelf, or even possibly back to that demand zone. Yo, what's up, Rotten? Is it Gunner? What's going on, man? Yeah, he was in the live stream this morning. Yeah, that was great. Some great NQ longs this morning. Got the original entry 23,503, and then I added once we closed above our demand zone and retested it right here. Now, the reason I was confident in the longs down here while people were looking for shorts is because we had this big increase in volume on this 5-minute candle, and once we saw an increase in volume and we failed to continue, that's our sign of a reversal. Increased in volume and failure to continue is a reversal. Increase in volume and continuation is simply that, a continuation. So once we get that increase in volume at a reversal zone, which would be a demand zone, that's when we have our A+ setup in my book. And now look at that, guys. You guys are getting some great trade setups. You're learning a little bit from me today, learning a bit from Andrew today. Guys, I'm telling you, I promise Futures Fever is going to be your go-to show. It's going to be fantastic. Really great guests. I'm super, super excited to show you guys what I got cooking, what I got in store on our next few guests as well. And if you guys ever have any recommendations, definitely feel free to please reach out. And again, you could reach out to me here. On Instagram is at Trading with Kev. My Twitter is at Trade with Kev. And of course, follow us on social media across the platforms at Benzinga, where we post consistent market news, market updates, and also post some of these great shows. Yeah, it's Jay, you're absolutely right. It's a journey, and having smart people around you is a must. You want to surround yourself almost like any type of work, any type of job. When you're trying to learn anything, you want to surround yourself with people that are where you're trying to be, right? You don't want to surround yourself with other people that are also struggling, because you guys might not be able to help each other too much. It might help in the sense to have a trading buddy, to have that extra sense of accountability. However, being able to put yourself in a position where you're learning from a mentor one-on-one, whether you're watching a trader trade like just live stream, whether you're here on the Benzinga pre-market playbook, you're trading with Andrew, you're trading with me, make sure if you're in that beginner phase, you're trading with somebody, but you're focusing on your own trading journey. Don't be trading with somebody and assume you could just take their call outs and make profits for life. No, our goal, at least I know my goal as a trader, teacher, and streamer, is to teach you guys how to trade so you could take your own trades by yourself. Our goal as traders isn't just the financial freedom, it's the freedom of time, it's the freedom to be our own boss. And that's really, really what sets trading aside from every other industry, in my opinion, out there. So this was the NASDAQ. I wanted to show you guys gold today because gold has been giving us quite the moves. Oh man, I knew it. Yo, Jay, I don't know if you saw this morning, but while we were in the NASDAQ longs this morning, I noted that gold came back to our demand zone. This is at 945, closed back above. Now, usually this is the setup that I like to look for when it comes to trading supply or demand, is I like to look for us to come back to the demand zone. And then look at this. We even had our increased volume on the candle that's in our zone. And then we reversed from there. Now, if I didn't get my entry right here, I would look for us to close out of the zone, because us closing out of the zone is almost like the confirmation where Andrew looks for us to close above or below the moving average. I look for us to close back above the zone with buying. Then I would take a wick, because look at the candles right over here, guys. We end up wicking into this demand zone 2 more times before finally finding some support and rallying to the upside. This wasn't a crazy trade. This wasn't the biggest trade in the world. It wasn't a trade that we're never going to see again. It's a very common trade with a very common setup. It was a bull move on gold, and that's because gold has been trending the past few days. So it's something to be aware of. Our daily time frame, everything, guys. Everything is so important. Just like I love that Andrew pointed out the top-down analysis. I do the same thing, guys. We want to start on a daily time frame. When in doubt, zoom out, look to see where our current range is, and then because price action up here and all the way down here isn't that relative to where we are right now, this gives us a bigger picture view of the chart, and then we're able to zoom in and come find some more relative areas. So an area that I noted on gold here is 34.90. So right up here, this is a daily basing candle that rejected. Look at this, guys. We have our highs of 35.30 and lows around 32.75. We rejected these highs 1, 2, 3, almost 4, 5 times right here. So this is our high of the range. This is where we're looking for sellers. And then I see this is the low of our range. We're looking for buyers. So I know that intraday on gold, I'm really just looking at our recent days, right? So I want to look and see, have we been breaking previous day high and closing green? This day, we didn't break previous day high. We had an inside day. The following day, we did break that previous day high because we were able to find that trend. Now today on gold, I noted that we've already broken that previous day high. So previous day high on gold was right here. The New York session, the future session closes at 5, opens back again at 6. It closed here, it opened again right here, and as soon as it opened, it broke that previous day high, and then it broke it again. So I knew the odds were much higher that we want to close green because we broke that previous day high. What are your thoughts on a tick chart? That's a great question. So tick charts are fantastic because they don't measure price movement by time like time frame charts do. They measure it by tick. So they are pretty good. I've actually seen some people with a lot of success using range charts. And that's right down, not this range. I think it was a different, no, it is this range right down here, range charts. And they did pretty well with it because range charts really go by the range that we're getting. So like on the NQ, you would use a 80 tick or an 80 range or a 400 range. Yeah, right down here. Whereas the ES, you would only use maybe like a 20 range. Tick charts are pretty solid. I would probably recommend, though, do your time frame analysis on a higher time frame, 15-minute and higher to find your supply and demand. And then for entries, you might want to look for the tick charts to help support the supply and demand zones you were looking for. Nice. Rotten as a gunner says ES did the same thing on his diamond pattern. That's awesome. Listen, a diamond pattern, that's another trading strategy where you draw trend lines out there, right? It's not something that I use, but it's something that can be consistent. A lot of trading strategies, look at this falling wedge into this demand zone. This would have been another form of confirmation for gold longs right there. So my point in all of this is, guys, every strategy works. You just have to be consistent enough with it to learn it and execute it properly. But that takes time. Everything that's worth it takes time, whether it's trading, whether it's learning how to drive a race car, whether it's to be a doctor, whether it's to be a lawyer. Things take time, especially if they're worth it. So this was gold. We went over some NASDAQ. Now something, guys, I'll leave you guys with one more hint when it comes to trading, and this is a gold trick. So guys, don't forget, run that like button up. I do appreciate it. We had such a phenomenal show here today on Futures Fever. I believe we are a few likes away from 75, so I do appreciate that, guys. Run that up a little bit more. I'd like to see 100, but I know I'm asking a little too much now. So something with gold, guys, to mention is when we're looking and trading gold, we want to also look at where the dollar is currently trading because the dollar is an inverse correlation to the gold. So if we see that the dollar, look at this right here. Now, some people might look at this and go, oh, well, that doesn't help at all. The dollar's range bound. How's that helpful? Well, range bound is one way to look at it, but another way to look at it is weak. Right? This is a weak chart. We're failing to continue higher. We're failing to continue lower. This is a weak chart. So if the dollar is weak, that should lead to a stronger gold. And that's what we've been getting. So something to look for, something to keep an eye on. Hit that like, hit that subscribe. Join me next week for Futures Fever. I am so excited to get these shows absolutely popping. Guys, like, subscribe, share with a friend, share on your Instagram story. Tag me at Trading with Kev. I'll repost it myself. I will see you guys next week. Oh, and join me for NVIDIA's earnings call as well. That's going to be today at 4:30 p.m. Eastern here on the Benzinga channel. All right, take care, everybody.